understanding the market structure and the shifts quarterly, okay? If you are looking for a way to systematically reduce everything down to a nuts and bolts, this is how I do things, this is how I follow this process. I'm not going to do anything outside of these rule-based ideas. This is what you are trying to do. You want to do this with your trading plan. Between April, May, down into June, you really want to be focusing on going short stock indices. The bigger moves, the cleaner moves are going to be on the sell side. Going long in the fall, going into they call it the Santa Claus rally, the Christmas rally. The market tends to create a little bit of a flurry run up higher going into the close of December. Now, with all the things going on in the world today, that's probably an invitation for it to not pan out this year. And if it does, don't let it be a discouragement, because I want you to go back through as many years as you got data to go back and look at it, and you'll see it's there. It's there, it repeats, it repeats, it repeats. Okay, so doesn't it make sense for you to be focusing on one side of the marketplace where there's the tendency for it to move in greater magnitude, one direction, and lean only in that direction for your bias and narrative ideas for taking trades? Right away, you have filtered 80% of the bullshit that most traders fall victim to. You're not going to push it hard in the summertime because it's the doldrums. Now, there's opportunities to do that, but you're not going to be pushing your highest leverage. You don't want to do that because there's a likelihood of it becoming choppy and messy. So time of day, you want to be focusing on, if you're, say you're in the sell model, in the spring highs that go down to the summer doldrum lows, leading into the fall months low that starts to rally up into the close of the year. During the spring fall time period, I shouldn't say it like that. In the spring declining or sell model, where it's likely to go lower on the daily chart and continuously drop lower, if you look at time of day, you can start studying and see that the London Open between 2 o'clock and 4 o'clock in the morning Eastern Standard Time, you will have a 70% likelihood of seeing the high of the day form. What will it look like? It will look just like that fucking model I gave for free on YouTube. You're going to wait for some buy-side liquidity to be taken. Then there's a shift in market structure. Wait for the fair value gap to form. Sell short in the fair value gap. Hold it. Minimum. Hold it minimum to New York Open. And then see if New York gives you a continuation where you can go in and maybe pyramid. That's a goal for you to do. Not go out there and start doing it right now. It's just something you grow into. That's where you have to have a model right now you work on. But what is your end objective? What are you really trying to do as a trader? I want to sell short the highs in the London session, or buy long the lows in the London session and hold for the daily range. That's day trading. If you're doing anything less than holding for the daily range, you are intraday scalping. That's it. Now you can break that down into session swing trading, where you're swinging the entire New York session or the London session and getting out before 5 o'clock in the morning Eastern time. There's nothing wrong with that if that's your model, if that's what you want to do. And you don't want to do anything else because time of day and schedule, school, business, your family life, you just don't want to be in front of the charts a lot of times. You can make a career just by doing session only. 2 o'clock in the morning to 5 o'clock in the morning, there's your 3 hours. That's it, you're done. Or work the 8:30 to 11 o'clock morning session in equities and be done. Don't trade the afternoon. Or trade 1:30 to 4 as your PM session. If that's what you want to be doing, and that's the time that fits your window of opportunity, then there it is. The question's going to be, what can I do, ICT, if I can't do any of them? I don't know personally. Like, I don't know how to answer that, because I don't fuck with Asia. It's very far and few between opportunities that form in Asia that I like. I just don't like it. Doesn't mean you can't find an opportunity there. I don't have the confidence as a mentor to say you should do that. Okay, you want to be in the highest order flow volume that's coming into the marketplace, which is London and New York session, and in the afternoon session too in New York. So those 3 time periods are kind of like your 3 the 3 best times of when you want to be trading and why you should be doing it. So if you're using the time of day idea coupled with that sell model in the spring months going down in the summer months in stock indices, the ranges will be gravitating going lower. Not every single candle in the daily chart is going to be a down close. And that's another thing that neophytes do. They come in here, they think every candle is going to be a down close. But I thought it was, the bearish bias was going to, you have to have other things, folks. And market profiles. Now, before I get any further with this one, I am not talking about market profile, where they do the little volume histogram, on its side axis, and they look for, point of control and all that stuff. That to me, no offense, Corpse, that's bullshit stuff to me. Like, I don't think there's any reason for anybody to do that stuff. But if you're making money with it, God bless you. I'm not here to detract or say anybody that's making money with it can't make money with it going forward. I'm just saying I don't personally subscribe to that, and I already know what your volume profile shit's going to say to you before you see it. So market profiles, I have weekly profiles that I use, and I use daily profiles. So what is that? I'm looking at the tendency for the market to do certain types of delivery. It'll make the high of the day in London and then go in consolidation the rest of the day in the New York session. Or there'll be a classic sell day where it'll run up, create the high of the day in London, and then sell off all day long and go close somewhere close to the low of the day. Or a classic buy day where it creates the low of the day in London and then rallies all throughout the day and then closes near the high of that particular day. There's seek and destroy, where it's a day that looks like a really good trading opportunity, and all of a sudden it hands you your ass. It starts chopping back and forth. As soon as you even think it's a seek and destroy day, you stop trading, turn the charts off, walk away. I have blown accounts in bonds. I have blown accounts in S&P, and I've blown accounts in Forex, getting caught in seek and destroy days, pushing it, thinking I'm going to be able to come out of what I was doing and making it worse. So one of the best things you can do is, in all of your studying, really put focus on days where you see it going higher high, lower low, higher high, lower low, higher high, lower low, and then all of a sudden, later in the day, it takes off and just blows out one other range, and that's seek and destroy. Like, nobody's allowed to be making money in that day. That's hard. It's demoralizing when you fall victim to it, and I've done it. And unfortunately, there are times where I don't know when it's going to creep in, but here's how you know when it's likely to. It's going to be right before a big like FOMC day. It's going to be before a rate announcement type thing, some kind of high impact news